We want to talk now to Acting Managing Director of the IMF, John Lipsky. He joins us live right now. Welcome to In Business Today, sir. I want to quickly ask you, on the back of those stunning pictures out of Athens today, are you surprised at the level of upset and violence in the streets in response to this austerity?
Well, I'm not there. I wouldn't want to comment, and I also wouldn't want to exaggerate. But the actions taken by the Greek Parliament today are extremely important. And I want to be clear, they tend to be mischaracterized as essentially austerity measures. Certainly, budgetary discipline is part of it, but the heart of these measures is to introduce really important structural reforms in the Greek economy that are intended to restore their competitiveness within the euro area economy and open the way towards a restoration of growth and sustained prosperity. Without improving the competitiveness, there's not a hope for stronger growth. And that's the bedrock of these efforts. They're not trivial, they're very important. The debt and deficit problems are symptoms of that lack of competitiveness, and that has to be the focus. The reporting is too much on as if the budget was the heart of the problem. It's a problem, but not the central problem.
No, and I know the markets are concerned not about the budget, but long-term the solvency issue with Greece. But the pictures that we're showing, the people in the streets are upset about the budget, which is why I was asking you that. But I want to move on and ask you about, we got some clarity today with the austerity measures that will be taken. But with that solvency question now, from the proposals that you've seen, do you approve of the French proposal on how to handle some of the debt that Greece has on the books of French institutions?
Now, what you're talking about is the other important decision that was taken in the past week, and that was to include what was called private sector involvement in the Greek financing package looking forward. And the discussions with institutions, with financial institutions, just began in the last few days. In broad terms, it's an important decision to have included what we call PSI. This contact's important, and eventually there will be, on a voluntary basis, some degree of contribution by private sector creditors. This is all part of a broad package of finance that supports that structural reform process. We'll have to see about the details yet.
What is the IMF's position, though, as to the appropriateness of that role?
Oh, for sure, we have supported the European partners' preference that there would be private sector involvement in the package. There have been, as you know, some discussion among our European partners about what the limits of that, the exact nature of that involvement would be. And the progress in the last week was an agreement on principles that it would be voluntary, and now we're working on the details.
Well, I want to ask you, sir, about the report in the U.S. that you put out today at 10 a.m. The IMF has urged the increase of the debt ceiling in the United States to avoid a shock. There has been, as I'm sure you know, questions raised by political leaders in this country saying that you can avoid a default even if you don't raise the debt ceiling by prioritizing interest payments. What do you make of that premise?
Well, let's focus on the big point. The big point is, and as our report says, that not just for the U.S., but the U.S. partners internationally all view the establishment of a credible medium-term fiscal plan that will eventually stabilize and eventually reduce the debt-to-GDP ratio in the U.S. as crucial for continued progress and stability in the U.S. economy and the global economy in general. So the broad process is important. The details, obviously, avoiding default in the U.S. government debt market is of importance here for the U.S. It's important for the global financial system. And I'm sure that the participants in these important discussions will recognize that fact. So progress is important. Convincing, credible, medium-term progress on U.S. fiscal challenges is absolutely critical, but at the same time, it's important to avoid the potential disruptions to international markets.
Which is why you're pushing for that increase to the debt ceiling. I want to ask you about this report. When you raise issues about unemployment in this country, you say 40% of the unemployed out of work for 6 months or more may result in permanent loss of work skills. It sounds like you do think the U.S. is in a situation where they're facing structural joblessness.
Well, the data certainly suggests that unemployment continues to be a problem. By the way, not just in the U.S., but in many advanced economies, as we know. What you've raised is really around the discussion of the issue of what is the potential rate of growth in the U.S. in the post-crisis period. And our analysis suggests that the recovery is going to be somewhat slow relative to the past. But considering that this has been a recession that was accompanied by financial stress, by a severe downturn in the housing market, that the recovery actually and the expansion now is proceeding at a reasonable pace. The problem is it's a pace that is not going to make a large dent in the unemployed in a quick fashion, and that's a concern.
You also, in this report today, ask about raise the risks from changes in the regulatory framework that could contribute to shifts in financial stability cross-border. Specifically, what are you concerned about?
Well, this is the broad point here is the need for international cooperation in setting a new regulatory framework to make sure that as the regulations are strengthened and tightened in one country, this doesn't just result in a shifting of risky operations elsewhere, what we would call a process of regulatory arbitrage. And that's why international cooperation has been so important in this regard. At the same time, as we note, that one of the aspects that is holding back the U.S. recovery is the healing of the U.S. financial system, which is still incomplete in many aspects. And that's why we emphasize the importance of continued progress of implementing the important reforms that were adopted in Congress over the past year.
And one of those strains on financial institutions is the weakness that we continue to see in the housing market. And you raise that issue as well. It sounds like you're suggesting that the government needs to be more aggressive, though, with banks in terms of how they handle mortgages and renegotiation of payments by consumers.
Well, we have suggested that this is an area, and we know that the administration and Congress are continue to be interested in this regard, to see if there is some aspects in which we could improve the process of dealing with delinquent mortgages to avoid or at least limit the process of foreclosures and to limit the potential damage of the overhang of potential foreclosures that are continuing to weigh on at least portions of the housing market. But I'd make one broader aspect, one broader remark with regard to the financial sector. Large corporations are in very good financial condition right now. The financial system is an important support of expansion in the small and medium enterprise sectors, and that's an important reason why continued healing in the financial sector is very important in supporting the recovery, the expansion.
And what do you attribute that divergence, that different story in corporate America to? I mean, is it support from quantitative easing? Is it cost cutting at those institutions themselves? What is it?
Well, it's been a combination of ingredients for large corporations especially. There have been important progress, especially early in the downturn, in supporting productivity gains. There is the fact that many large corporations these days are global and are benefiting from strength of growth in areas like emerging markets. The low interest rates have been very helpful in reducing financing costs. All of that have contributed to important strength in the corporate sector that represents a real source of fuel, if you will, for potential and sustained growth in the U.S. Smaller businesses, which we know are an important source of job growth, continue to be constrained by relative weakness in consumer demand, but also to some degree by constraints in the financial sector, and that's why this process of financial sector healing is important for the sustained expansion in the U.S.
John Lipsky, thank you so much for your time today and for covering the United States and what we're seeing in Europe. Appreciate your time. Acting Managing Director there of the IMF, joining us.